Hi, my name is Alcanne Houtzaager and I blog and vlog about impact investing. And this vlog is about my ideal inclusive impact investment product. It was inspired by an article in Harvard Business Review from late January. Brian Trelstad, who works in the States for Bridges Ventures, which is an award-winning British social investor, he wrote about making sense of the many types of impact investment, and he presents a model with 5 P's, and they are, and I will show them to you, they are place and process and planet and product and paradigm, and the other 5 are my characteristics for the ideal inclusive impact investment product. I will describe the 5 P's from Brian's model. Place is the geographical location, so you invest in either a poor country or a poor region. For instance, Brian's Bridges Ventures in the UK invest in the 15% poorest regions. Planet is obviously to do with protecting the environment, saving resources such as water, investing in renewable energy and green and clean tech to save on carbon emission. Product is to do with the social impact for people, so think microfinance and financial inclusion, but also social housing and affordable health care, affordable education, anything basic needs. Then there's paradigm, which is sort of the P word for disruptive change, where you have developed a radical systemic change, a product or service that is going to change the world. And the last one, which is an important one for public equity investing, is process. Just to make sure that investing in an impact sector actually presents total positive impact, because the way that the company or the project is run is also sustainable. And I really like this 5P model because, of course, when you are investing, you can search for investments that combine as many P's as possible. Now I have come up with my own model, which is cricket, so not nice 5 P's and not really a cool world. But I do like the fact that the PRI actually resonates with the principles for responsible investment, which are United Nations initiative and already signed by 1,500 financials. My word is actually public, price, impact, return, and catalyst. And I will start with public because I like public equity. It's transparent, it's liquid, and there's a huge range of investment products and asset classes. But I also like crowdfunding for impact, that is. In Holland we have a couple of dozens regulated crowdfunding platforms, and they protect small investors' interests, they do credit ratings, and everything is taken care of by the platform. There's a couple of specialized crowdfunding for impact platforms, and what we see is that our more sustainable banks are actually investing or cooperating with these crowdfunding platforms. Do not underestimate crowdfunding as a financial force. Mass Solutions is a research bureau, and they expect crowdfunding to be larger than venture capitalism at the end of this year. The second letter in my cricket is return, and return should only be risk related. So more risk, more return, lower risk, lower return, and there should not be excessive impact fees or screening fees, because especially for small investors, those are very high prices to pay, and it might mean that you lose all your return in the long run, or just a large part of your return. Now, impact, of course, is obvious, but impact should have 2 characteristics in my views, and that it should be measured, of course. Now, it can be measured with a very fancy global impact investing network system of IRIS, standardized data, and GERS, which is the global impact investing rating system. But there's a lot of metrics going about. There is sustainability ratings, there is ESG criteria, which stands for environment and social and governance. And personally, I like the CSR Hub, which is an online database which presents you with a company's number, their judgment on their employees, on their community, on their environment, and their governance/transparency performance. And I like it because it gives you the opportunity to combine both the core activities of the company with the impact criteria that you find very important for them. So, for instance, when you are investing in a health company, you want to look at their rating for how they treat their patients and their employees. What I also like, if the impact is incentivized. Now, that's a characteristic of a very exclusive private equity impact investment, which is called social impact bond. It's a British invention, only 6 years old. By now we have over 100 in the pipeline, and the market is estimated at 200 million. And what happens is that private financiers come up with usually a couple of million. As I said, it's very exclusive. But they finance a project which saves society a lot of money, and of course people a lot of misery. And society, i.e. the government or a local council, can pay back the investors because it actually saves a lot of money on this target group or this policy field. And the nice thing about social impact bond is that they often have an impact incentive. The more impact achieved, the higher the return for the investors. So I would like to see that for many more impact investments. The fourth letter in my system is actually, is it a catalyst? That means, are we talking about additional capital? Is the project going to start because we come up with finance, i.e. For instance a startup, which of course is important for disruptive change investments, systemic change, radical change services or business models. And the other one, which I find very important, is are we supplying growth capital? Because scaling up products and services that improves people's lives is just as important as coming up with systemic change. The more people we can help, the better we are doing as impact investors. Now, philanthropy and governments will never be able to come up with solutions for all humanity's needs. So upscaling of things that we have proven to work is very important. And the last characteristic in my model is actually price. Price is very important. We have a couple of very fancy exclusive private equity impact investment funds. We have green bonds, which are actually public equity because the nominal is 100,000 US dollars or 100,000 euros. You cannot buy into these really cool green activities of multinationals. So I like penny stock, stock that only costs a couple of cents or euros or dollars, or maybe a couple of hundred if you're talking about sustainable property. And also the costs of the investment should be low. You can buy great super sustainable investment funds, but if the fees are a couple of percent a year, there goes your return, especially in the long run. And that's it. I hope that you can work with this model. You will find that if you look into my portfolio and my impact indicator, that I've actually already chosen a lot of investments that are as many P's as possible when we're talking about Brian's model. And obviously price is a very clear, for me, an important decision maker, but I like the other ones as well. So I hope you can work with this model and you find it inspiring, and if you have any suggestions or remarks, do let me know. You can find my email on the blog or on the blog on YouTube. Thank you.